Assalamualaikum warahmatullahi wabarakatuh. In this video, we are going to discuss about chapter 4. Assalamualaikum warahmatullahi wabarakatuh. In this video, we are going to discuss about chapter 4, which contains a statement of comprehensive income and statement of change in equity. Before we discuss about financial statement, we must first know and understand about accounting cycle. Here are 9 steps or accounting cycle, 1 to 9. The first step of accounting cycle is identification transaction. We identify every transaction that enters the company or happened in the company. And then the second step is journalization. That is, we record every transaction that occurs in the journal. After we record, the third step is that we post every transaction that has been recorded in the journal into the ledger. In this ledger, there are each account with its respective nominal value after we record it from the journal. And then after we know and pause every transaction that occurs into the ledger, we will know the final balance of each account, which is all summarized in the trial balance. Step 4. This trial balance must be balanced between debt and credit, of course. After we get the trial balance, the balances still have to be adjusted. We adjust the balances. After that, after adjustment, there will be a trial balance after adjustment or adjusted trial balance. Here we have 2 options. We can immediately make a financial statement, or we can put it together in a worksheet. Now, this worksheet is optional. Worksheet help us in preparing a financial statement later. Step 7 is making financial statement. After making a financial statement, we make closing entries or a closing journal. We close every nominal account, and then after we close every nominal account, we make trial balance after closing. Well, here are also refreshing journals or refreshing entries, which are usually optional for each company. I've told you about accounting cycle, the 9 of accounting cycles, the 9 steps of accounting cycle. Now, after that, we will discuss financial statements. According to PSAK1, companies publish a minimum of 5 types of financial statement. The following are arranged in order of preparation. Namely, 1 is comprehensive income statement, and then statement of change in equity, and then statement of financial position, and then statement of cash flow. And the last one is notes to financial statement, comparative statement of financial position. Now we talk about the first one. The first one is statement of comprehensive income, or we can call it with statement of profit and loss and other comprehensive income. Is a report that measures the success of a company's performance during a certain period. Statements of profit and loss and other comprehensive income are useful for assisting users of financial statement in predicting future cash flow in order to determine profitability, investment, and credit worthiness. Here are also usefulness and limitation of the statement of comprehensive income. the usefulness first is for investors. Investors use information about companies' past earning as important input in predicting future profits, of course, and cash flow, which are then used as a basis for predicting future stock prices and dividends. Okay, the second one of usefulness is by using past profit and loss information, creditors can understand the potential debitor's ability to generate future cash flow needed to pay interest and repay loan principal. And then the last one of usefulness is in many companies, bonuses given to managers are determined based on their success in achieving profit targets. And then here are limitations. The first one is income or expenses that cannot be measured reliable are not included in the statement of income or expenses that cannot be measured reliably are not included in the statement of profit or loss and other comprehensive income. And then the second one is report profit are influenced by the accounting method used. The second one is report profit are influenced by the accounting method used. And then the last one is measuring income and expenses involves management judgment. Okay. And then we have known about what is statement of comprehensive income. Now we will know about elements in statement of comprehensive income. Of course, there will be income and expenses. Income, an increase in economic benefits during an accounting period, and then sales or service revenue, income arising from the company's operational activities, and then expense is a decrease in economic benefits during an accounting period in the form of an outflow of assets or an increase in liabilities, which results in a decrease in equity. And then there will be also cost of goods sold. Expenses are arising from the cost of inventory sold or services provided, and then selling and administrative expense. Okay, total comprehensive income is divided into the following: profit and loss component. Profit and loss is the total income minus expenses, which are not included in other components of comprehensive income. And then component of other comprehensive income or other comprehensive income. Okay, sorry, there is a typo. Other comprehensive income contains income and expenses items that are not recognized in profit or loss as required by other SAK. Other components of comprehensive income include the following. The first one is change in revaluation surplus of fixed assets and intangible assets. We can see it at PSAK 60, and then fixed asset and PSAK 90 about intangible assets. Okay, after that, components of comprehensive income is actuarial gains and losses on recognized defined benefit plans. We can see it in PSAK 24 about employee benefits, and then again, and losses arising from the translation of financial statements of foreign entities. and then gains and losses from a remeasurement of financial assets categorized as available for sale. We can see it at PSAK 55 about financial instruments. Okay, the last one is effective portion of profits and losses on cash flow hedging instruments. We can see it at PSAK 55 about financial instruments as well. Okay, now we have known about the definition, about the elements in statement of comprehensive income. Now we will know about how to present statement of comprehensive income. Companies can present all components of comprehensive income or income and expense item recognized in one period. There are two forms that you can use. The first form is in the form of one statement of profit and loss and other comprehensive income, where all income and expenses items are recognized in one period, or the single statement approach. We can call it single statement approach, or can be called single form. Or the second form that you can use is in the form of two statements, the two-statement approach, or it could be called a double form, which content is report showing profit and loss components, and then report that starts with profit and loss and shows the components of other comprehensive income or statement of comprehensive income. Okay. After that, statement of comprehensive income, one statement approach. We will know about one statement approach first. I'll tell you about the single approach one. In the statement of comprehensive income approach of one report, the presentation of profit and loss for the current period and other comprehensive income for the current period is present in one report of profit and loss and other comprehensive income. In PSAK1, presentation of financial statements, the minimum items that must be present in a single form comprehensive income statement are regulated, namely revenue, of course, and then financing costs, and then share of profit or loss from associate entities or ventures record using the equity method, and then income tax, and then discontinued operation, net income, and then other comprehensive income components classified according to nature, and then share of other comprehensive income of associates and ventures record using the equity method, and then the last one is total comprehensive income. Okay, here is a mechanism for how to make a statement of comprehensive income in one approach. Sales revenue minus cost of goods sold equals gross profit plus other income minus operating expenses minus other expense minus interest expense plus or minus other comprehensive income, and in the end we will get total comprehensive income. Of course, we will get total comprehensive income. So this is the format of one approach, statement of comprehensive income in one approach. Okay, after we know how to make statement of comprehensive income in one approach, now I'll tell you about statement of comprehensive income two-statement approach. If the company presents it in a double report format, the company prepares two reports, namely income statement and statement of comprehensive income. So there will be difference between income statement and statement of comprehensive income. The minimum items that must be present in the income statement are revenue, financing costs, share of profit or loss from associates and ventures using the equity method, income tax, discontinued operation, net income, attributable net income or loss allocation is divided between two classes, primary or monetary. Okay, next, the format income statement. Okay, income statement. Okay, next I will explain regarding the statement of change. Okay, sorry. Okay, here is the format for statement of comprehensive income into approach. The first one is net sales minus cost of goods sold, and then we will get gross profit, and so on. Items that are not present in the income statement are then present in the second financial statement, namely the statement of comprehensive income, which starts with the net income figure for the current period up to earning per share or profit per share. EPS is calculated based on the net income figure attributable to shareholders. Okay, here is the formula how to get EPS or earning per share. Net income minus preference dividends, and then divided by a weighted average of ordinary shares outstanding. Okay, other work reporting issues. Accounting change and error. Change in accounting principle, example, change in the inventory valuation method from FIFO to average. And then there are also error corrections and then return earnings statements, example, correction of understatement or overstatement of net income in PSAK. The statement of change in equity is used. Comprehensive income, example, unrealized holding gain or loss of non-trading securities, and the statement of change in equity. Okay. Okay, statement of comprehensive income is done. Now we move to statement of change in equity. Okay, I will explain regarding the statement of change in equity. The definition is the change in equity report present information regarding change in the company equity between the beginning and end of the reporting period, which reflects the rise and fall of the company's net assets during the period, of course. Whether originating from deposit or distributions to owners or from the company's performance during the current period. According to PSAK1 presentation of financial statements, the report on change in equity for a certain period contains the following information. Total comprehensive income during the current period, and then the impact of any effects of retrospective application or restatement for each component of equity, and then reconciliation of change during the current period for each component of equity resulting from profit or loss for each item of other comprehensive income, as well as transaction with owners, and then dividends recognized and the amount of dividends per share. Okay. Okay, here is the format for how we will obtain or prepare a report on change in equity. Starting with the beginning balances, starting from share capital ordinary, and then return earnings and comprehensive income, and finally there is a total equity of the three. After that, we will enter the income balance that we take from the previous income statement that we made. We put it here. Okay, after that, there is dividends. Dividends will minus return earnings, and then there is the ending balance of all. We calculate share capital ordinary, return earnings, comprehensive income, and the total. Okay, so that what I explained, sorry. Sorry. Okay, so that what I explained earlier is clear. Let's discuss the practice questions. Let's go to the first practice. Okay, now we will discuss, I explain to you about practice questions. Let's go to the first practice questions. Okay, these are information from PT Durian regarding the trial balance from PT Durian for the period 31 December 2021. According to instructions, making a statement of comprehensive income report using a two-statement approach. There is information or balances for each account. So first we have to analyze which accounts are included in the income statement and which account are included in the statement of comprehensive income, which here I have marked in the green as being in the comprehensive income category, and then meaning this will be included in the statement of comprehensive income. The instruction and the rest is include in income statement. Okay. The instruction asks us to make a comprehensive income report using two approach. Well, it is also known that we were asked to calculate the EPS for 2021 with the number of share outstanding 110,000 shares. Okay, let's answer the question. First, we have a profit and loss report or income statement. There is net sales minus cost of goods sold. We will get gross profit. And then reduced by selling expense, administrative expense, and then we will add other income like rent revenue, and then reduced by other expenses like loss on sale of plant assets. We will get income from operation, reduced by interest expense. Then we will get income before income tax. There is income tax. And the final, we will get net income. Now, this net income that we will use to get EPS or earning per share. How to calculate earning per share, how to get EPS is, like I said before, the formula is net income minus preference dividends divided by outstanding shares. Because there is no preference dividend, so 126,000 minus 0 divided by outstanding share. So earning per share is $145. Next, after we made income statement, because the instruction told us to make in two approach, the next step is make statement of comprehensive income. So every account that didn't include in income statement, we put it here. First, net income. We get net income from the previous statement, income statement. Put it here, and then other comprehensive income, and then unrealized holding gain, net of tax, loss from fixed asset revaluation, unrealized holding gain, loss from fixed asset revaluation are the component of statement of comprehensive income. So we put it in a statement of comprehensive income. Okay, the final is we will get comprehensive income. Okay, we have finished answer to question number 1. Now, there is practice question number 2. Statement of change in equity. Okay, the first question is finished. Then we move to the second question, which is related to the statement of change in equity. Here there is some information related to Orange Company. The first is capital ordinary share, 500,000, and then accumulate other comprehensive income from unrealized holding gain on non-trading equity securities, and then return earnings for 14,000. During the year, the company had the following transaction. First transaction is the company paid dividends. 10,000 were declared and paid, and then net income for the year was 130,000, and then unrealized holding loss of 7,000 occurred on its own non-trading equity security. Okay. So the instruction are that we are asked to make a statement of change in equity for Orange Company and a statement of financial position in partial. Here we first make a statement of change in equity for the year, and that's December 31, 2021. Starting from the initial balance of 500,000 of beginning balance from share capital ordinary, and continuing comprehensive income 55 10,000 and a total equity at the end. The total of all. Then adjust to below. There is a net income. Net income here will add to return earnings. After that, it is added to the total next to the total equity. And then the unrealized holding loss is including comprehensive income and becomes a deduction. The balance is total aside. And then the company paid a dividend, 10,000, which is placed as a deduction from return earnings. After all transactions that occur are entered, then they are totaled. The result must be the same as total equity. Okay, we have finished creating the change in equity statement. Like I said before, the total must be same like total equity. The total of share capital ordinary, return earnings, accumulated other comprehensive income must be the same like total equity. Okay, we have finished creating the change in equity statement. Now you only need to enter the partial financial position statement in the equity section of the financial balance of each account. You put every account of equity section like share capital ordinary, return earnings, accumulated other comprehensive income, and total equity. Total equity must be the same like total equity in statement of change in equity. Okay, we have complete all the question and we have understand the comprehensive income statement and change in equity statement. Thank you for your attention and see you.